Daily Briefing Report on Global Economy Update, February 6, 2025. Hello everyone, and welcome back to Daily Briefing. I'm your host, Atnafu Solomon. In today's report, we'll explore the global economy from 2023 to early February 2025. Buckle up as we delve into the key trends, challenges, and opportunities that have shaped the economic landscape over the past couple of years. 2023 marked a year of recovery as the world continued to rebound from the COVID-19 pandemic. Global GDP growth reached approximately 4.2%, fueled by robust demand in consumer markets and significant government spending on infrastructure projects. Key emerging markets, particularly in Asia and Africa, showed significant growth. India continued its upward trajectory, with GDP growth hitting 7% as it became one of the world's fastest-growing economies. Meanwhile, sub-Saharan Africa benefited from a commodities boom, particularly in mining and agriculture. However, as we moved into 2024, the global economy began to face several headwinds. The most prominent of these was persistent inflation, which started to stabilize but remained above central banks' targets in major economies. The United States Federal Reserve maintained higher interest rates to combat inflation, leading to rising borrowing costs and tightened financial conditions. In Europe, the war in Ukraine continued to impact energy prices, causing significant volatility in the markets. Natural gas prices, while lower than the peak seen in 2022, remained a concern for many European nations. The European Central Bank responded with a series of rate hikes to stave off inflation, but this also pushed some economies into recessionary conditions. Analysis of key economic indicators and trends, early 2025, sectoral performance and wage dynamics. The technology sector emerged as a resilient growth driver, with global revenues surging 8% year-on-year, fueled by breakthroughs in AI, quantum computing, and clean energy technologies. By contrast, traditional manufacturing in Europe and Asia contracted by 2.3%, hampered by elevated energy costs and weaker demand for durable goods. Wage growth showed stark regional disparities. U.S. hourly earnings rose 3.5%, outpacing inflation and bolstering consumer resilience, while Europe saw stagnant wage growth, 1.2%, amid high unemployment and fragmented labor negotiations. Housing market adjustments. Global housing market stabilized unevenly. U.S. home prices declined 5% from 2024 peaks as 30-year mortgage rates settled at 5.5%, easing affordability pressures. Europe, however, faced persistent housing shortages, with urban centers like Paris and Berlin experiencing 4% annual price increases. Governments responded with expanded rent controls and tax incentives for affordable housing projects, though supply constraints lingered. Demographic pressures and policy innovation. Aging populations in Japan, 33% over age 65, and Italy, 24%, strained public finances, prompting reforms to raise retirement ages and expand means-tested pension benefits. Meanwhile, Canada and Germany introduced fast-track visas to attract skilled migrants in healthcare and tech, aiming to offset labor shortfalls. Despite political backlash, these measures began showing early success, with migrant labor participation rising 12% in key sectors. Geopolitical risks and energy transition. Oil prices remain volatile at $85 barrel due to Middle East tensions and Red Sea shipping disruptions. However, renewable energy adoption accelerated, with solar and wind capacity expanding 18% globally year-on-year. The EU's Carbon Border Adjustment Mechanism, CBAM, spurred green industrial investments, while emerging economies like India leveraged low-cost renewables to attract $50 billion in foreign manufacturing projects. Government debt and fiscal tightening. Post-pandemic debt burdens constrained fiscal flexibility, particularly in Europe, where Italy's debt-to-GDP ratio reached 145%. The U.S. maintained deficits at spending at 5% of GDP to fund infrastructure and semiconductor subsidies, contrasting with the EU's austerity-driven reforms. Emerging markets faced divergent paths. Brazil and Indonesia capitalized on commodity exports to stabilize debt, while Argentina and Egypt grappled with IMF-led austerity measures. Consumer behavior and digital transformation. A shift toward value-driven spending persisted, with global e-commerce penetration hitting 35% as discount retailers and private label brands gained market share. The gig economy expanded to 12% of the global workforce, though debates intensified over worker protections. Meanwhile, AI-driven productivity tools boosted service sector output by 4.2%, offsetting labor shortages in sectors like logistics and healthcare. In terms of the stock market, major indices showed resilience by early 2025, with the S&P 500 making a steady recovery and returning to pre-pandemic performance levels. Technology stocks, which had initially suffered from increased interest rates, rebounded strongly as advancements in AI created new investment opportunities. Real estate markets, however, remained under pressure due to rising mortgage rates. In many urban areas, property values corrected significantly, and analysts began discussing the concept of a housing reset in markets that had previously seen rapid price appreciation. International trade dynamics. Global trade dynamics have also shifted. The Asia-Pacific region saw a renaissance in trade relations, especially between China and Southeast Asian countries. The Regional Comprehensive Economic Partnership, RCP, played a significant role in promoting intra-regional trade, making goods cheaper, and promoting local supply chains. However, there were concerns regarding geopolitical tensions, particularly between the US and China, as these two economic powers continued to engage in trade disputes. Efforts for decoupling tech supply chains continued, which posed challenges for multinational corporations. Sustainability and green economics. In terms of environmental initiatives, there was a significant push towards sustainability, with many countries increasing investment in green technologies. The UN Climate Change Conference in late 2024 highlighted commitments from nations to significantly reduce carbon emissions, and there was a marked increase in the finance dedicated to renewable energy sectors, which is expected to grow exponentially over the coming years. In conclusion, as we move forward into 2025, keeping a close eye on inflationary headwinds eased, structural challenges, aging demographics, energy transitions, and debt sustainability loomed large. Advanced economies leaned on technology and immigration to counter stagnation, while emerging markets balanced commodity reliance with green industrialization. The IMF's projected 4% GDP rebound hinged on stable geopolitics and continued central bank vigilance, underscoring a fragile yet adaptive global economy. That wraps up today's daily briefing. If you found this video informative, please like and subscribe to our channel. Let us know in the comments your thoughts about the global economy. Until next time, I'm Atnafu Solomon, and this was your daily briefing.